Welcome to our video on the financial management in your SAE project. Now, this is an introduction video to try to talk to you about really kind of some of the very basic ideas of why keep records and a little bit of terms that go along with that. Now, as we move into next week, we'll go into a whole lot more details about each one, but I thought it may be good to provide an introductory review or video for SAE financial management. All right, let's take a look at some of the details I have for you. As far as financial management SAEs, the objectives that I have is we want to define important financial reports. So how does a student, when they keep records, what are some key reports they must look at? So we'll introduce that concept here. We also want to talk about the definitions of income and expenses and net income. And we'll talk about that through an example. Again, this is the introductions to these concepts. And then finally, the last part is I want to talk on, again, an introduction to SAE growth. All right. As far as reviewing financial entries, they really differ by type. So let's start right away with what you've learned to be an entrepreneurship SAE. First part about entrepreneurship projects is that you may gain growth, profit, through the changes of inventory. The idea is if I'm a grain producer and I produce corn, I have a product to sell, but I do not sell it. So I don't have income yet, but I do have the product itself. Now, another example maybe in farming is that I have a corn production SAE, and I'm not talking about the grain I have produced, but I have a lot of fertilizer or insecticide that I purchased. So that's an expense for me, but I did not use it. That may also relate to inventory. So in entrepreneurship, the first thing that we sometimes talk about is, do you have any items for sale? That would be inventory. Now, you also then detail the expenses, that's maybe cash or non-cash that you spend, and then finally you detail the income. So I produced the corn and I sold the corn, that would be income. The overall effect of net income and SAE value is to determine growth, which again may be from inventory you haven't sold yet, or the net income of income minus expenses. And that's this idea of growth. All right, journals would also be important because they illustrate time, but we're talking a lot about money right now. Now, if I switch away from entrepreneurship and I go to research, the goal is this research report, but it does have some financial implications. Research funding is whenever someone gives you money to do your project. Of course, the idea is that I got this money for my project. I then detail out the expenses that relate. Typically, these offset each other, so net income may be only there whenever you get funding of, let's say, $1,000, but it only cost you $800 to do the project. Then you end up with some growth. Again, journals are really the value part of a research SAE, and this idea is recorded in journals again, which is easy. Now, sometimes that's also looked as unpaid. That means that you get additional financial value from those journals. Okay, moving about financial entries into placement. This is where you again have that job experience, and really the main record here is a paycheck. Paychecks really represent how you get paid, and that's cash income. Or if your SAE placement is unpaid, then that's not going to be a financial entry. That's going to be a journal. You may have some expenses that relate to your paycheck, such as items that you have to buy that are typically deducted from your paycheck. So that may be an expense that you have. And then the growth is really, again, paid paychecks to show growth, or unpaid, which would be journals. And again, journals is the last part that talks about your illustration of time. Even if you are paid, journals still represent the time that you've put into the project. Okay, and the last one is foundational. Foundational, really, anytime you're talking about expenses, those are really personal expenses. They're not really related to growing your SAE. That's not it at all. They're just personal. In fact, if you spend money, those do decrease your overall value of growth financially. Journals really are the main record, and they are tracking the time that you've entered into the project. All right, so let's review this idea of SAE investments. Now, the idea of SAE investments, I'm going to start off with the axis called risk. Risk is the idea that you're going to put money into a project. Now, this money that you put into a project could be zero, or it could go up from there. Now, the next axis I want to bring in is time. So really the two resources that students invest in an SAE is money, which is on the vertical axis, risk of money, of loss, or time, which is on the horizontal axis. So those are the two. All right, now as far as keeping records, I'm really focusing on the money part in this section of the class, but time is still an important part to balance in here. So let's start talking about the SAE, like foundational. So foundational, I have one project, I build to a second, I continue to build different foundational SAE projects. They are definitely part of record keeping, but when it comes to the SAE risk area of money, they're in the no risk category, in other words, below zero. Now, if I keep moving into my SAEs, I end up getting into an SAE called placement, which is a job, but it's unpaid. So once again, it's in the no risk category, but however, all of these require time. Now, as we move into the financial record keeping, which is the focus of this section, we're going to first start talking about paid placement. Now, again, that's where you got that paycheck. There is money. However, I would say it's low risk, but you're going to put in time, no doubt. So financial record keeping here is really kind of one conversation. Again, low risk, but high time. In other words, you're going to get a paycheck. Now, the next area is this area here. This is really where we spend a lot of our time talking about financial records in an SAE. That's entrepreneurship. Entrepreneurship is, as you can see, high risk and high time. So it's the most complicated kind to keep records on. Now, you may say, where does research SAE fall? It kind of falls usually somewhere in the middle here. It's got high time and it could have high money involvement. However, the risk-reward ratio is not as high, meaning that if you get $1 million to do a giant research project, well, you're going to spend close to the $1 million. So if you get $1,000 and you spend $800, then really you don't have the same risk reward as an entrepreneur, but there could be reward and risk. So that's why I place it into this category, kind of in the middle. So this hopefully gives you a visual illustration of the concepts of record keeping and why we want to start keeping records. Now, I'm going to go ahead and take the ones that are really about financial record keeping, and that's entrepreneurship. And then I'm going to put research in that category as well, because as I mentioned, it may relate. So really what we want to look at now is 4 scenarios. I've got them built in. As students record dollars and again time, but I'm really focused on the dollars right now. As they record these financial entries, there are different situations that may come about. For example, A, what if you have a student that has high return financially, but they also had beginning inventory, meaning they didn't start at zero, they already had stuff. Well, then you're going to be talking about a student that as they keep records is recording more and more and more growth, and they're eventually going to hit a spot which we're going to call A, high growth, and of course it's taken time to get that done. Now, if a student starts with nothing, they may end up in the same place, but it's probably going to take them more time because they started at zero. And so, depending on the student's income versus expense, they both have this kind of situation that over time they are growing their financial net income, which is called growth. They're getting rid of risk by making money, so there's what that would look like. Now, more than likely, you have a student that may start with beginning value and they do grow, but it's not as fast as the A and B. They still end up growing, but they end up kind of just collecting money each year. And actually, as an entrepreneur, that's probably not where they're going to be. Maybe they're more like a paycheck person, because you can see how it's this constant growth. They're growing, but it's very, very flat. So it's not really a super duper entrepreneur like A and B, but they still are growing. In fact, you can see they represent that paycheck area. You start to wonder, is the student actually just getting paid here? Because they're putting in more and more time and they're getting money relative to that. So maybe that's what that looks like. Then you, of course, got a student keeping records that are not doing very good. So eventually, even if they start with things, beginning inventory, that goes down over time. If the person in C and D didn't even start with anything, they would begin at zero and right away barely make any money or actually lose a lot more money. So that's the idea of that. So these different options is really why we keep records. We keep records because situation A, B, C, and D may all happen to a student with different SAE projects. And we keep records because everybody's not A and everybody's not B. Everybody's not C and everybody's not D. In fact, one student could have all 4 of these scenarios in their time. And so keeping records helps us keep up with all 4 of those outcomes, all in a system where we can get the overall end value correct. In other words, did the student grow financially their records? So here's the importance of records: is the growth in value is determined by record keeping. So we keep these records so we can keep up with A, B, C, and D. The more frequently students keep those records, the easier time it is to understand the A, B, C, or D outcome. Really, the most valuable outcome is so the student can change what they do in their next SAE to end with financial growth. So if a student is in situation A, they need to keep doing that. If student is in situation D, we need to make some changes so that we can actually create that growth to happen. Finally, the outcome is really financial statements. So as students keep those records, these financial statements come into play. And sometimes we're talking about the whole kit overall or just in one SAE. So let's first talk about the whole kit. That's called a balance sheet. A balance sheet represents SAE records from start to finish, all dates. They represent personal and SAE. Typically, they show up in 12-month periods, like January 1st to December the 31st of 2017, and then the next would be an 18 and a 19. This idea of a balance sheet represents something we call debit and credit. This is really one of the detailed parts about record keeping, is there's always a debit and there's always a credit. So some of the stuff we get into next week, we'll go into those details. Then finally, the last is a statement. It's called the income statement, and that's looking at the profit of a single SAE one at a time. Now, you can combine them all together, but really it's better to look at one SAE at a time. So the records here don't start on all dates. It's whenever the SAE starts, whenever the SAE finished. Income is from sales or inventory, like we talked about, and expenses are from the SAE, what it costs to run that, plus any overhead allocations like depreciation, which are generally for the whole student, but a portion of that can go to each project, and that's why we talk about overhead allocation. So the net of these is really what you look at on the income statement. So here's just a simple example that's sometimes common. Students actually buy things like trucks or vehicles or trailers, and then the question is, hey, I bought a new truck, so that shows growth, right? And the answer to that is in our records. So really the first thing is the student buys a truck. Now they have a brand new asset, so they're happy, but the only way they got that asset was to give up money. Now maybe they borrowed the money, or maybe someone gave them the money, but all of those situations aren't the student's money. So when a student does buy a new truck, they've given up money, so the actual result is there's no gain. In this situation, the truck is used in their SAE, but the outcome is no gain. So when a student acquires an example of a vehicle, that's not a financial show of gain. The financial show of gain is really the record keeping of the SAE. Maybe the example would be I raised corn for my corn project for my SAE. I spent $10,000 raising the corn. That's for my expenses. Depreciation caught me for another $100, so I have $1,100 in this corn. And then now I sold it for $3,000. Well, then that's going to create profit. So SAE transactions in the area of raising corn for an SAE is really kind of our focus. Things like buying new assets, the accounting of that will show us that there is really no gain there unless you sell it later. So the idea is that as we keep records, that's the important part of measuring students' growth. Okay, so this video is just meant to be an introduction to SAE records. Those situations of A, B, C, and D, that's really the details of record keeping. So in this next week, we're going to move into, first we're going to start with terms, and then we're going to start with this idea of debit and credit, more about the balance sheet, because that's the most important financial statement, and then more about the income and expense statement that actually relate to that. So as we get into next week, we'll get very much into the details of this. Hopefully this video has given you some insight to where we're going, which will again be next week on financial management and an SAE.